Hello friends, welcome to Accounts Made Easy. This is Mitesh sir, and today we are going to discuss about partnership accounts. At the initial stages, we are only going to discuss about what is additional in partnership accounts because we have all learned final accounts of a sole trading concern. However, yes, there are a few changes in it. So let's understand the basic differences between the final accounts of a sole trader and partnership accounts. So when we look at the initial thing, the most important thing is that in types of capital, when you have a partnership account, you have got two options. Option number one, the firm can decide that let's have fixed capitals of our partners. Or option number two is the partners or the firm decides that let's keep the capital of the partners fluctuating. That means changing. All right. So what is the difference between the two? When we look at the fixed capital method, if the capitals are fixed, it would mean that any changes in capital would not be shown in capital account. Rather, a new account called partners current account is maintained. Let's understand this. Every year, there are multiple transactions that take place which may increase or decrease partners' capital. For example, if a salary is paid to a partner, the capital of a partner increases. At the same time, if there is any interest charged on the drawings by the partner, then the capital of the partner would decrease. So all these adjustments which may increase or decrease the capital balance of a partner are recorded into a complete separate account called partner's current account. Therefore, whenever a firm decides that they want to keep the amount of capital fixed, they maintain two accounts. The first account is the partner's capital account, and the additional account is called as partner's current account. However, at times, the partners may decide, let's not worry about what was the initial capital we bought. Let's continue posting everything into our capital accounts. That is where it's called fluctuating capital account. That means each year the balance in the capital account would change. Therefore, when we look at this, we understand that if the capitals are not fixed, then any changes in capital would be shown directly in capital account, which also means easy for us. We don't need to create an additional account. One single account, that is partner's capital account, and our job's done. So these are the two methods how we can maintain the capital of a partner. Now the big question arises. Sir, you said changes in the final account. Let's look at this. In a sole trading or a sole proprietorship business, when we do final accounts, we have only trading, profit and loss, and balance sheet. However, when we talk about a partnership account, few additional accounts are maintained. And in the next part of the same video, we are going to understand what are those accounts and how are they maintained. So let's have a look at this. As you can see at the top of the screen, there is an additional account called profit and loss appropriation account. This account is not maintained in a sole trading account, but it is maintained for a partnership account, final accounts. Right. Now, when you look at the word appropriation, the word itself means division. So what is the job or the purpose of this account? The purpose of this account is to distribute the profit among partners. And after this, at the bottom of the screen, as you can see, there are two different methods of maintaining partners' capital, what we just now discussed. Before we proceed to the next part, let's first look and understand profit and loss appropriation account. It's like a normal account. On the debit side, we record all incomes of partners like salary to partner, interest on partner's loan, any kind of commission paid to partner, etc. Now, a lot of people ask, Sir, you are saying debit and then you are recording incomes. Isn't that wrong? Now, let's understand here. Yes, on the debit, we usually record expenses only, but we need to remember that this account is made in the books of the firm, and one person's income is another's expenses, which means, yes, here we are recording the incomes of the partners, but these incomes are actually the expenses of the business. That's the reason it's recorded on the debit side. On the credit side, the first thing that happens is we bring down the net profit from a profit and loss account. And after that, there is only one item which appears on the credit of P&L appropriation. And that item is interest on drawings. Right? I hope everyone's got this. Now let's understand how do we record information in the fixed and fluctuating capital methods. First and foremost thing that you need to understand is when we talk about fixed capital, we will have to maintain two accounts, partner's capital account and partner's current account. So the available information will also be in two parts in the question. They will give us the capital balances and the current account balances. At this point, one important thing for everyone to remember. Partner's capital account will always show credit balance. I repeat, partner's capital account will always show credit balance. However, yes, partner's current account may show a debit or a credit balance. All right. Normally, in a partner's capital account, we will just have buy balance brought down, that is opening balance, and to balance carried down, that is closing balance, until either capital is withdrawn or additional capital is introduced. All the regular activities of the partners will be recorded into this additional account called partners current account. Now we need to remember, partners current account, there will be either a debit or a credit opening balance, and other than this, complete information will come from our profit and loss appropriation account, which means all the items recorded on the debit of appropriation account will then be posted on the credit of partner's current account. Similarly, the interest on drawings will be recorded on the debit side of partner's current account, right? So this is how from profit and loss appropriation items are posted to partner's current account. One very important thing for you people to remember, the only item which does not appear in P&L appropriation but will be recorded in partner's current account is drawings of the partner. If there are any drawings given, we do not record drawings in appropriation because it is not the distribution of profit. However, yes, drawings will be recorded on the debit side of partner's current account. I hope up to this point we have understood, because the next part is very easy. As far as fluctuating capital is concerned, we just don't need to worry much. Pick up the information and directly post it. However, remember, this is a capital account, and capital account will always show a credit balance. So we are looking at only the credit balance. Bring down the credit balance and then post the items from appropriation to capital account exactly the way we have done in current account. All the debit information from appropriation goes to the credit of capital, and similarly interest on drawings comes on the debit side. Yes, but remember, drawings will not come in appropriation, but of course, yes, it will be recorded here on the debit side of partner's capital account, right? So this is what we do in this video. We'll continue with admission of partner in the next video. Till then, thank you guys. Take care. Bye bye.